While AI is fundamentally reshaping the real economy, an equally powerful transformation is brewing in the world of finance. The core idea is simple but incredibly powerful: tokenizing money and assets. A simple way to think about this is converting the proof of ownership for almost anything of value, from a dollar bill to a skyscraper, into a secure digital token on a blockchain. This is poised to redefine how value is stored, transferred, and traded on a global scale. As we'll see, this isn't just a technological curiosity, it's a mechanism for extending the global reach of US financial markets in a profound new way.
This tokenization revolution is advancing on two major fronts simultaneously. First, we are tokenizing currency itself. This is where stablecoins come in, creating a fully digital, internet-native version of the US dollar. Second, we are tokenizing assets. This is the much broader and perhaps even more transformative idea of converting ownership of real-world assets, like stocks, corporate debt, commercial real estate, and even more exotic assets, into tradable digital tokens that can move instantly across the globe, 24/7.
Let's start with stablecoins, which are the most mature example of this trend. We're talking about tokens like USDT, which is Tether, and USDC, or USD Coin. And a quick fun fact, we call them stablecoins, but they're technically stable tokens built on existing blockchains, not standalone coins. They work by taking real-world US dollars, or equivalent assets like short-term government bonds, and issuing a digital token that is redeemable for those underlying assets. The growth has been absolutely explosive. As of mid-2025, a staggering 99% of the stablecoin market is backed by the US dollar, with a total value exceeding $238 billion. But the most crucial statistic is that over 80% of these transactions happen outside the US. This is clear evidence of a huge global demand for a digital, internet-native version of the dollar for savings, payments, and trade. Beyond currency, the movement to tokenize assets like equities and debt is rapidly gaining steam. This idea evolved from the wild, unregulated days of the initial coin offering, or ICO boom, which, for all its faults, proved that you could raise capital globally without the traditional gatekeepers. Now, the industry is maturing into more regulated forms like security token offerings, and this is going mainstream. For example, a major platform like Robinhood now offers tokenized US stocks to its customers in Europe, including shares of iconic private firms like SpaceX. The appeal is undeniable. Imagine being an investor anywhere in the world and being able to buy a piece of a high-growth US company 24/7 right from your phone, without needing to go through a traditional stock exchange. This is no longer a niche idea. The giants of traditional finance, Wall Street, are now jumping into the game, and they're starting with some of the biggest markets in the world: private credit and US Treasury bonds. In fact, by mid-2025, these two asset classes already made up about 88% of the tokenized real-world asset market. The ultimate sign of confidence came when BlackRock, the world's largest asset manager, launched its own tokenized fund. This institutional confidence is bolstered by signals from the White House of a pro-innovation mindset, giving these firms the green light to pursue long-term digital asset strategies.
So, what makes this RWA tokenization so powerful? It is best understood as the next evolution of a 20th century financial tool called asset-backed securitization. The old model was limited. It could only really handle big pools of similar things like mortgages. But RWA tokenization can be applied to virtually any asset class you can imagine: commercial real estate, fine art, private equity, venture capital fund interests, and even intangible assets like intellectual property or a band's future royalty streams. It offers huge advantages, including enhanced liquidity by allowing high-value assets to be divided into thousands of affordable tokens. You don't have to buy the whole building, just one digital brick. It also reduces costs and settlement times by eliminating intermediaries like lawyers, custodians, and transfer agents, all while increasing transparency through the blockchain's immutable, auditable record of ownership.
The adoption by major institutions signals that Wall Street sees tokenization not as a threat, but as a powerful upgrade to the entire financial system. For example, giants like Goldman Sachs and BNY Mellon have launched a platform to tokenize shares of money market funds, bringing a massive $7 trillion market onto modern blockchain rails. For these institutions, the strategy is clear. Use this technology to broaden worldwide access to U.S. financial products and operate their markets around the clock, capturing more business from every corner of the world.
So, when you put this all together, how does it actually amplify U.S. financial power? It works through two distinct but complementary channels, transforming the journey of capital from Wall Street to what we might call the world wallet, the digital wallet on every smartphone. The first channel is stablecoins, which act as digital ambassadors for the U.S. dollar. The second channel is tokenized assets, which give U.S. firms and markets a direct, frictionless pipeline to global capital.
Let's look closer at Channel 1, stablecoins as digital ambassadors. This is a form of bottom-up digital dollarization. For people in countries with high inflation and volatile currencies like Argentina and Nigeria, stablecoins offer a financial safe harbor. For many, accessing a stablecoin is far easier than opening a traditional U.S. bank account. This provides huge strategic benefits for the U.S. It strengthens the global use of the dollar, boosts demand for the U.S. treasuries that back the stablecoins, and effectively exports U.S. monetary policy to every corner of the globe. Now for Channel 2, tokenized assets. This is about creating a direct pipeline for global capital to flow into the U.S. economy. This democratization of investment is incredibly powerful. An investor in India or Brazil can now, with a few taps on their phone, buy a token that represents a stake in a high-growth Silicon Valley startup or even a piece of the royalty stream from a Hollywood movie. This funnels even more global capital directly into U.S. enterprises. It also enables a leapfrog effect, where people in emerging markets can bypass underdeveloped local banking systems and jump straight into a sophisticated digital economy dominated by U.S. assets.
Of course, this rapid expansion doesn't happen without creating some tension. It presents major challenges and is already seeing some pushback. Global financial regulators are concerned about financial stability and illicit finance. Meanwhile, other nations view this digital dollarization of their economies as a direct threat to their monetary sovereignty. In response, many are likely to promote their own central bank digital currencies, or CBDCs, and impose stricter rules to curb U.S. influence. However, for now, market forces strongly favor the U.S. dollar ecosystem for its deep trust and convenience.
So far, we've talked about tokenizing money and assets. But there's a final, more subtle way this technology stack is reshaping the world, by dollarizing the global talent pool. Cloud computing provides the perfect infrastructure for seamless remote collaboration. But one of the biggest hurdles has always been how to pay them quickly and cheaply across borders. The solution? US dollar-pegged stablecoins are emerging as a revolutionary global payroll system. Using stablecoins for payroll is a game changer. It completely bypasses the traditional international banking system, which is notoriously slow, expensive, and complicated. With stablecoins, a company in California can pay a software developer in Nigeria instantly with almost zero fees. And crucially, that developer receives stable digital dollars, protecting them from the volatility of their local currency. This isn't just a theory, it's happening at scale. Large payroll platforms like Deal already offer instant stablecoin payments in over 150 countries, while crypto-native specialists like Rise and Request Finance have already processed over $1 billion in crypto payroll.
The outcome of this is a hyper-efficient system for global talent arbitrage. It allows U.S. firms to completely decouple specialized work from geography. They can now hire the absolute best software engineer or designer, whether that person resides in Bangalore, Buenos Aires, or Boston. This not only lowers costs and accelerates innovation for U.S. firms, but it also has a profound strategic impact. It subtly, but powerfully, dollarizes the global labor market. The dollar's primacy spreads not by treaty, but by convenience. One tap, one token, one paycheck at a time. Thanks for watching. If this helped, like and subscribe. Join us next time as we unravel the next piece of the puzzle.
To explore these ideas further, we recommend the book The Token Empire, available on the Amazon Kindle store.